Hi, Tim Bigham for Delta Derivatives, option hedges and edges, powered by the best option scanning tools on the market today, rbtrader.com. And taking a look at a market that is selling off a little over the past couple of days after looking like it wanted to break out to the upside. We have the jobs number coming out tomorrow, which outside of maybe a big beat or miss at the extremes on the non-farm payroll side, I don't expect much of anything, as the Fed has pretty much telegraphed that they are looking to raise rates at that long-awaited, long-anticipated December meeting. So with market valuations, as we've talked about many times, getting a little extreme, and now with the Fed maybe officially raising rates, I think, we'll have a little difficulty going forward, certainly using that kind of 212 level on the SPYs, which is the S&P 500 ETF, as big time resistance to the downside. We're looking at 204 as support, with 208 as kind of the swing point. We've been chopping back and forth right around that swing point. So I think given the fact that stocks are at these levels here, putting in low put protection, the VIX, although it's off the lows, still not onerous at the 16 level. We're also looking at stocks like Amazon, which just continues to head higher. I think it's the number 4 market cap stock in the U.S. here. Seeing a little anomaly there as well, where out of the money calls are actually trading at a higher implied volatility than similar out of the money puts. Normally it's the kind of reverse of that. Last time I really saw that in earnest was Apple pre-split, back when it was also around $700. It did signal a short-term top, certainly in Apple, as the upside exuberance and the upside fear, if you will, has kind of gotten out of hand here on Amazon. So we're using that to structure a trade, selling the December 710 calls, buying the 720s, getting about $1.70 net credit. Just looking for Amazon, which last I looked was trading in the mid 690s, to maybe stall out a little bit here, given that, kind of historic run it's had. So we're also using those RB-Trader option scanners. Saw some big call volume in Himax over the past couple months or so. Today the stock got a big upgrade. Those call buyers fully rewarded. Yesterday we saw the reverse of that. We saw just enormous volume on EUO, which is the Euro ETF levered. A big time player putting a big levered bet, about 85,000 contracts traded on the February 28 calls. That buyer not being rewarded today. I think the bet was on Mario Draghi this morning, coming out with even more and bigger bazooka type event. Actually, it was just kind of status quo, so we saw EUO fall. Big time, those calls almost cut in half here. So that's kind of the danger, if you will, of some of these big option players who are speculating. You want to make sure you're aware of them, but you also want to do your homework on the underlying stock. So until next time, this is Tim Bigham. As always, here's to good trading. Take care.